Snipers, you have to see what's happening to the Bitcoin price this Monday as we have a gravestone doji candle that closed for the week yesterday. And so I had to get on my chart to show you guys exactly what I'm expecting for Bitcoin in the immediate short term. We could consider this an emergency because right now we're inside an extremely tight range that could give us a confirmation as to whether or not Bitcoin wants to break below 41,950, which for those that have been tuned into the Cypress channel, you know this is the most important level, that if we see any hourly and 4-hour candles close below 41,950, it opens up the range with a support of 38,000 US dollars. Now, we have talked about a potential upside scenario where we could form an inverse head and shoulder here right around the $40,000 level to see upside. And I've been pretty adamant about the fact that if we get down below 41,950 and we do see any price action below 40,000, that I don't believe 38,000 is going to hold, that we could potentially come back down and test this channel support around 34,000 US dollars to then break to the downside, because of course this would be the second retest, and when you knock on a door for a second time, the likelihood that that door opens becomes highly likely. So I had to get on my computer today to get on the charts. There's a lot of technical analysis to look at today, new previous weekly opens. So smash the like button for the YouTube algorithm if you guys support this content, and subscribe to the channel if you've yet to do so, youtube.com/snipers. And first I want to talk about the bullish and bearish case right now for Bitcoin. In the immediate short term right now, 41,950 has to hold as a support. If we start to see hourly and 4-hour candles close below this level, that's going to be an extremely worrying sign for me. And you guys know how important our price levels are on our channel. We're always to the exact dollar. We don't just put out boxes and ranges for you. And so this is extremely important that we get hourly and 4-hour candles staying above 41,950. If we see that breakdown, I'm going to talk about what to expect, but what I do want to just throw off the bat is we have now a previous weekly open at 42,380. If you hear my dog, I apologize. 42,380. If we can get any hourly and 4-hour candles above this level, guess what? That could actually be a bullish confirmation that 41,950 wants to hold, and that we can come back up to test 44,800. And so that's going to be the major checkpoint, of course, that the bulls need to conquer. And we know the importance of this level. If you've been tuned into the Snipers channel for a while now, over the last few weeks, we've talked about the head and shoulder neckline that we're currently facing as a major resistance. And so 44,800 is going to be the level that we have to get above if we want to invalidate that bearish pattern. But so far we have a rejection from the neckline, and I'm not going to draw out the head and shoulder this time, but just realize that right now we're in an extremely important range here where Bitcoin needs to hold 41,950. If we break below it, this is what I'd want to see. If we do see a decisive break below 41,950, what I'd like to see for Bitcoin is to maintain price action above 40,000 US dollars, because that's going to be the most amount of downside that I'd like to see in order to assume that there's still a potential bullish case where we have an inverse head and shoulder pattern here, and that this could just be a right shoulder forming, and just to test the range below 41,950, staying above the midpoint of the range, which is really right at that $40,000 level. And so what we have to monitor is, if we cross below 41,950, how are the hourly and 4-hour candles looking? What is the volume looking like? So far, you can see here, if we were to actually just go into the micro time frames, every time we're seeing a spike of sell pressure here at 41,950, we're actually even seeing buyers come in to eat away that sell pressure. And so because we've yet to see any large spikes of sell pressure, we're not necessarily seeing the bears win at this level. And so there's still a potential we could hold either the $41,950 level or the $40,000 level to see more bullish momentum to the upside. And the way that would look on the more macro time frame is on the daily chart or the weekly chart. What we'd really just be doing is coming down, testing this range one last time, forming a schematic of an inverse head and shoulder, a higher low from the initial lows that have been formed, and that would be a stair step up towards new higher prices. And so that's why 40,000 is important. And I will stick to the opinion that if 40,000 breaks, then we will most likely come down, and this wouldn't be as fast, I believe, as we've come down so far. I think that this would actually slow down the price to see more sideways price action to where we'd want to come and maybe test the $34,000 level again to then eventually see a more stronger downside move down to the $26,000 to $24,000 level where volume might come in. And at that point, I believe that would be the bottom. And so that's why 41,950 is so important, because that's going to give us an idea of whether this is going to happen or if we're just going to be seeing continuation to the upside. And of course, the midpoint of this channel right around the $52,000 level would be our first target if we break above 44,800. That's off the table right now. We just want to address some downside scenarios because the revolving parts of the market right now, as you guys know here in the Cypress channel, we're also a 4-dimensional channel, which means we cover every aspect of the market. The S&P 500 is starting to come down a bit. We've yet to form new lows, so we can still consider this a higher low. Tomorrow's turnaround Tuesday, so as I talked about yesterday, I was expecting downside on Monday, especially because there was the news of the Feds having their emergency meeting today, which we've really yet to get any sort of information on. And you can see Japan gapping down 2% today as well. A lot of the traditional markets have gapped down, but they've yet to break their recent lows. Even China barely holding its recent lows. But the fact of the matter is we've yet to break those lows. So there's still potential that turnaround Tuesday can come tomorrow where we see green and that we've only formed a higher low, because traditional markets are going to close here in 45 minutes. I don't think the S&P 500 is going to just capitulate down below this low in the next 45 minutes. And turnaround Tuesday could be the savior for us, and that could certainly push the cryptocurrency market up. Now, the DXY is pushing up, but it's still quite calm, I'd say, because the major level was rejected twice already. And so as long as we stay below these major levels, we could just assume the DXY is calm in this area. And that calmness is what we want if we want to assume that Bitcoin can move to the upside. And Bitcoin dominance is still trending up. I believe it's going to come towards 44% dominance. The total market cap stuck inside of this range. This is actually pretty good for us that we can get some confirmations on the overall health of the market, because now we have a previous weekly open at 1.915 trillion. If we can get above this level, that assumes Bitcoin's or not Bitcoin, but yeah, potentially even Bitcoin is ready to move up further. So this could be an early confirmation, but this would also assume that altcoins could start moving up further, because then that assumes the total market cap gets to 2.259 trillion. And so if we stay below 1.915 trillion, 1.78 trillion is the major support. So we still have a little bit of ways to go right now to the downside of the total market cap to form a garden variety higher low. So I think that this is a very good chart to watch right now, because we can come down even just a bit less, and that $1.78 trillion level, we're currently sitting at 1.84 trillion, and that would be a major support level that we could form a higher low at. And so I think that the bullish case is certainly still on the table. And I know from the start of this video, I did talk about this weekly candle being a graveyard doji candle, but I want to tell you exactly why that doesn't necessarily mean this is actually bearish, because we've been in a downtrend. If this was a graveyard doji candle on an uptrend, that could be bearish. And that all started in Discord with one of our premium members, Refot, saying, isn't that a bearish gravestone doji on the weekly? That's pretty powerful, no? And I posted this where in a uptrend, this candle here could be bearish, but in a downtrend, it actually could be a bullish scenario. And I like this chart a lot, because this is very similar to Bitcoin's price action right now, where we do have this bearish graveyard doji candle, but it's coming from a downtrend. And if you read here, it says gravestone doji is a reversal stock trading pattern that can be bearish as well as bullish depending on the position of the gravestone doji candlestick. If this candlestick has appeared after an uptrend with strong resistance zone, this pattern would be bearish. On the other hand, if this candlestick appeared after a prolonged downtrend with strong support, this is a bullish candle and the pattern is also bullish. And so I think that there's still a potential, just like that image, that we did see this bearish gravestone doji candle, but there's a puzzle piece on the table. And the fact that we closed our body above 41,950, that was the major level. That's actually bullish. The fact that the body closed above 41,950. And so that could assume that, yes, we come down just a slight bit more, but that doesn't mean that we haven't bottomed out already at the $33,000 level. If you've been watching our videos over the last few days, there's been so much on-chain metrics and fundamentals that have supported the fact that this could certainly be a bottom. We're not seeing long-term hodlers leave. They're holding their coins. They're not moving their coins. They're not showing fear. And the fact that Bitcoin dominance is moving up with Bitcoin's price moving up and altcoins coming down is totally fine. It's garden variety market behavior when there's a little bit of fear in the market, but that doesn't assume prices are going to come down. And so remember, greed doesn't just work when prices are high. Greed works when prices are coming down. People want lower and lower prices. They want more discounts, and that's also a form of greed. So at this point, I don't think we can assume further downside unless we start to see price action below 41,950, and then we want to watch the zone between 40,000 and 41,950. It would be extremely important to monitor the 4-hour and hourly candles when that is occurring. And then there are some bullish puzzle pieces I want to mention here. We have a hidden bullish divergence. So if you look at the relative strength index and this RSI here, just notice right now how we have a low and a higher low, and then we have a low and a lower low here. So this is actually a hidden bullish divergence where price action is forming a higher low, and then we're seeing a lower low form on the RSI. That's actually a very positive sign. And then we can pull up the 3-day MACD and talk about all these other bullish puzzle pieces, but this is also very nice to see here for Bitcoin on the RSI. And then when it comes to news, I do want to mention today BlockFi actually settled with the SEC. They paid over $100 million in this settlement, and now US customers are not allowed to use BlockFi or register for BlockFi, but the previous customers that have been on BlockFi earning interest in their accounts actually have been grandfathered in, and that was just part of the settlement. BlockFi does plan to release a new yielding product that's going to be registered with the SEC. So it's interesting to see that we're starting to see regulation, but that could affect the market in some ways. I don't think it's going to have a big effect, but it's certainly giving us a little bit of an understanding of how the SEC is approaching things. I think it's good that they were allowing them to grandfather in the current clients that are in the US in that interest account. And so that's one piece of news. And then with the hash rate hitting new all-time highs yesterday, I believe, we are now seeing the US as the biggest place where we're seeing Bitcoin mining. So the US is the number one hot spot right now for Bitcoin mining, and that was a very big change from 2019 and 2020, where China was the biggest and the main hub for Bitcoin mining. And so I think that that's actually a very nice puzzle piece to see that we are now seeing more Bitcoin miners in the US, which is a free country versus a country that maybe isn't as free. And so that's two pieces of news that I believe is extremely important. And other than that, there are some things that we want to talk about when it comes to on-chain metrics. When it comes to on-chain exchange flow, we're not seeing much there. But check this out. BTC percent balance on exchanges is currently at 13%, has not been at these levels since early 2018. And so we're seeing the amount of Bitcoin on exchanges right now at levels that we haven't seen since early 2018. We saw a lot of sideways price action around that time. And then lastly, I want to talk about this. Our year-long Bitcoin range divided into 2-week subranges, closing outside one has granted weeks of price action in the next. Yesterday's 2-week close above 40,000 suggests previous close was a deviation. Current 2-week key in determining which subrange we'll be spending the next few weeks in. And what that basically means is because we closed above the $40,000 subrange, that in the past, when we've closed above those subrange levels, we've seen preceding price action stay within that range. And so 40 to 52,000 would justify the opinion that we have the potential of testing 49,700 because we closed that body of that weekly candle above 41,950. That's why I meant it was extremely important, right? I told you guys it was extremely important that that happened, regardless of the fact that it was a bearish gravestone doji that we saw. And with that being said, I do want to say happy Valentine's Day to those celebrating. Enjoy your Valentine's Day with your loved ones. And with that, I do want to quickly talk about Ethereum to wrap up the video, and then we'll look at a couple other revolving parts. But that was just kind of the main topics I wanted to get out. Remember to smash the like button for the YouTube algorithm for those that tune into our Bitcoin analysis on a daily basis. We've been doing this for the last 5 years, every single day, and we have the #1 cryptocurrency technical analysis on the internet. And so with Ethereum, the same way that we have that previous weekly open for Bitcoin, we have 30.55 right now for Ethereum. If we can get above 3,055, that could be the early confirmation we're ready to come and test 34.54. We're in an extremely tight range there at 30.55 and where we're currently sitting. And really, I would consider this candle low on the 20th of September prior to when we formed these new highs as a major level here at around 26.52. And that was also where the previous weekly open was 2 weeks ago. But that changed on our channel because we always keep that in green. And our new weekly candle reset yesterday. So the previous weekly open now is 30.55. But the week before that, 2600 was that previous weekly open. And so that's really the tight range that Ethereum is playing in right now. And so we could even come down to 2600 and still have a little bit of room to form that higher low to see that continuation to the upside. And we know why it's so important right now for not just Bitcoin, but all of these altcoins to start moving to the upside. And I said I wasn't going to do it, but now that I covered the main topics of this video, I want to re-emphasize the importance right now that we break above this head and shoulder neckline that has been developing since mid 2021. You can see this right shoulder just now developed, and we rejected the neckline of this head and shoulder pattern. And if you guys understand technical analysis, especially on a macro pattern like this, when you have a head and shoulder pattern and it starts to break down, initially you want to take the head to the base of the triangle to determine a target for this bearish pattern, right? And so if we were to take that, we're looking at a target that potentially takes us to our previous all-time high and even below it, around the $16,000 level for this pattern. And so why is it so important right now that we break above 44,800 again? It's because in a bearish pattern like this, when you come and you break the neckline and you come to retest it, which is totally garden variety market behavior to retest the neckline, that's the make it or break it for the bearish pattern. You either see a continuation and you add more fuel to the bearish pattern when you reject the neckline, or you invalidate it by getting above the neckline and seeing continuation of the upside. It's good that we're seeing red today, I think, because we have turnaround Tuesday to potentially save us tomorrow. And with that being said, I think that that's all I wanted to cover today. Thank you all for tuning into the Snipers channel today. I know this is a little bit of a different type of video from the iPhone videos. If you guys support this content, smash the like button for the YouTube algorithm. Turn on those post notifications to get our updates first. Click that little bell. And then, of course, subscribe to the channel, youtube.com/snipers. And with that, thank you all once again. I appreciate each and every one of you tuned into the channel. I couldn't do this without you. I'll see some of you on the Discord. And just like Rafiki posted the bearish Gravestone Doji, I'd love to hear more of your guys' opinion on what's happening with the Bitcoin price in the comments below or in our Discord. It's discord.gg/profits, by the way, for those that want the link. And with that, thank you all for tuning in today to the Snipers channel. I'll see you guys next time. Snipers out.